Hi, I'm Jana van Rooyen, and this is the Overhouse Money Morsel. Welcome back. Thank you for joining us. If you would like to join us every week for these money morsels, remember to like, subscribe, and click the bell. With me today in the studio is Michael Porter. Welcome, Michael.
Morning, Jana. How are you?
I'm fine, thanks.
Good.
So this morning we saw that our 10-year bond yield has been the lowest it's been since 2018. With our finances at government, not much has changed. Why do you think our bond yields have dropped so much?
Yeah, it's amazing that they are so low, which is nice to see. Jana, I think it's really in reaction to the growing movement from the Reserve Bank and supported by Treasury to lower our inflation target. So just maybe a little bit of history for everybody on inflation targeting. Inflation targeting was actually introduced in 2000. Can you believe it? A long time ago now, 25 years ago. And everybody will be familiar with the sort of 3 to 6% range that the Reserve Bank has targeted, that introduced when that came in. And then I suppose as the years go by, they've sort of implicitly implied that 4.5% is our inflation target because it's sort of halfway between the two. So that's kind of where the Reserve Bank has been setting policy and what they've been aiming for from an inflation target inflation point of view. But now I think the Reserve Bank sees an opportunity, given where inflation is and a few other things and the sort of weakness of the dollar, to actually go to try and lower that target to 3%. And that is really it's a major change for the whole regime in South Africa.
Yes, so we haven't changed it yet, so it's all just about sentiment at the moment. What would you say, maybe from our stock point of view, how would that influence the behavior?
Yeah, I think the main thing, we've done a few charts, Jana, and looked at it. I think the main thing for, when you lower inflation is that the Reserve Bank then sort of does target a real interest rate. So you want your interest rates to be higher than inflation, otherwise it really doesn't encourage savings or anything at all. But on balance, since about 2008, the gap between, if you assume a 4.5% inflation target, has been about 1.75%. So if we then say inflation is going to be, we're going to go for a 3% target, and you apply that real rate, then interest rates could be 2 to 2.5% permanently lower in this country, not cyclically lower. Just, there's always a cycle in interest rates, but this would be a structural shift down in interest rates, and everybody benefits. The government benefits because they can borrow money at a cheaper rate, and they're already benefiting because bond yields have come down. Consumers benefit, businesses benefit, everybody benefits from lower interest rates. The only people who don't benefit are probably people relying on interest earned on their investments. And one of the implications of moving to a lower inflation target is that actually investments should do very well. Equities should do well, property should do very well, government bonds should do very well, and we're already starting to see the market starting to price in some of that. The thing that doesn't do well is cash investments, because your interest rates drop and the amount of interest that you're going to earn. So if you're relying on interest from your investments alone, it's time to consider something different.
So from my point of view, with the consumers that I have a close eye on, I can definitely see the positive impact that will have on their pockets. I mean, we know with inflation, if they lower the inflation, hopefully our Reserve Bank will also start lowering the interest rates.
Exactly, Jana. I haven't done the numbers for a little bit, but I think if you just take R1 million per R1 million home loan that you have, I think at the moment it's probably at about 11 or 12,000 rand of interest per month on that value. So interest rates will drop by a quarter, probably even a third almost. Then maybe a quarter from the prime rate. You're talking about big savings for people across the board, and for businesses. And then they'll be able to invest more money. There will be less incentive to hold cash from a business point of view and to invest it. So it really is benefit. And we look at the the consumer sector all the time. Inflation is obviously bubbles around, but what's your impression? I mean, even I think that sector has reacted to this news recently here, Jana.
Definitely. Even with our recent interest rate cuts, you could see definitely consumers starting to spend more. Our retailers are producing better growth numbers. Our earning forecasts are looking much positive. So SA Inc., which is predominantly mostly of this consumer staples and discretionary spending retailers, we see that the market reaction has been very positive.
Yeah.
With the lowering of the inflation target. So all in all, it's been very positive.
Yeah. And maybe one last closing comment, and I think everybody's always quite skeptical about inflation, and we did a presentation at Amber Valley this past week, and there was a question saying, well, my inflation's not 3 or 4.5%, and that's always the case, but I think there's always skepticism as to whether inflation can really come down. So my comment on that would be that this is a 3 to 4 year process of reducing inflation, and the Reserve Bank has really got to change the mindset and the psyche of people to believe that inflation is going low. So that's really what they will be driving at. But from a market point of view, markets are forward looking, and we've already seen a reaction to this. It's not always going to be in a straight line, of course, and but if we think we're heading in a certain direction, then the markets are going to react to that. And so you might not, or you might quite rightly say that inflation's not 4.5%, and my inflation's 7 or 8%. And do you go to the shops and do the grocery shopping? But the point is that we're moving in our direction, and markets are going to react to that. And so if you wait for inflation to get to 3%, you're going to have missed this once in a lifetime. It's a structural opportunity. It's not a cyclical opportunity. And so you actually need to get ahead of the curve. Yeah.
So SA Inc. is still one of our favorites at the moment. Our valuations are really cheap, and SA is really looking positive. Very happy about that. Thank you so much for that, Michael.
Pleasure. Thanks, Jana. Have a nice day.
Thank you for joining us. Remember to like, subscribe, and click the bell. Until next week. Bye.